The catastrophic collapse that America desires has only just begun. The catastrophic collapse that America desires has only just begun. As global stock markets crash, countless people are driven to the edge, climbing onto rooftops in despair. When smug folks ask me when they can buy the dip, I'm sorry, but I've been warning about this scenario for months. This situation, this crisis, is really just starting. You'll notice everyone in the market is scrambling to sell stocks, right? So, even if you feel you've lost a ton of money, even if you think you've dumped your stocks at rock-bottom prices, that's just what you think. When the whole world is slashing prices and selling off stocks, you might offer to sell at 50 cents, but someone else is ready to sell at 40 cents. So, who's more numerous, sellers or buyers like us? In other words, for us capitalists preparing to buy the dip, the current prices are still too high, not cheap enough. So, when will it be cheap enough? Simple: when everything is desolate, lifeless. When even those who never bought stocks, who thought this had nothing to do with them, are so desperate from losses that all assets are practically given away to us. Yes, you heard that right. If you peel back the layers of this game, you'll see its brutality. The end of this crash is the starting point for us to swoop in and buy the dip. In reality, that's when the financial crisis hits. At that moment, the wealth millions worked their whole lives to build becomes the property of the capitalist class. That's called the Great Wealth Transfer. Is that real? Welcome to Thu Tai Vin, dear viewers and friends. If you've been following my videos, you'd know that last year, Warren Buffett started selling U.S. stocks and hoarding massive cash reserves. Back then, the stock market was still soaring because of Trump's re-election, and countless people mocked him, saying he was old and no longer sharp. Yet those same people were the ones chasing U.S. stocks at their peak. Now, just one tariff blow from the U.S. government has left those peak buyers swallowing bitter losses. Meanwhile, Buffett emerged as the biggest winner. Not only did he sell stocks at their highest, but what he sold reveals the entire playbook of this game. What do I mean? Last year, many didn't understand why Buffett sold Apple stock, the company he once held the most. Now it's clear which country faces the heaviest U.S. import tariffs this time. China. And where are most of Apple's iPhones, laptops, and earphones made? China, right? So if Apple wants to sell China-made phones in the U.S., they'll face sky-high tariffs. Simply put, Americans will pay more for phones designed in their own country than others will elsewhere. As a result, Apple's stock plummeted 35%. See now? Buffett not only dodged the stock market crisis, but sold off before Trump took office. Stocks hit hardest by the new tariff policies. What does that mean? It shows that no matter who's president, the script and outcome were already set. Tariffs are just one tool to ignite this crisis. So, what's the end game of this crisis? Here's another clue. Buffett also sold Bank of America stock, his second largest holding. What does that tell us? If Buffett's asset sales were just coincidence, why did Bill Gates, Mark Zuckerberg, and Elon Musk also sell their company's stocks last year? Another coincidence? And if all these are coincidences, why was Li Ka-shing so eager to sell ports and cash out this time? Many say he sold due to political risks, but is that really true? Let me tell you. The first move by American capitalists was the interest rate game. The second, which they're playing now, is tariffs. The strategy's the same: pump global money into the U.S., crash the world's economies and assets, then have capitalists slowly buy up the bottom. The difference? Interest rates sucked money from the world, while tariffs make the world bear the losses. What do I mean? The key is how we should position ourselves in this second round. If you don't want to be a victim of this wealth transfer, or even hope to climb to a higher class, follow my channel. I'll keep sharing more insights. And if you're worried you'll forget after listening, wasting your time, just like this video, it'll automatically save to your playlist, so you can revisit and act on it anytime. Now let's get to the point. After the US raised tariffs, what happened? First, the US stock market crashed, right? Most people only see the market plunging, but don't think about where the money went. Over the past 2 days, how much money evaporated from the market? $6.6 trillion. Poof, gone. Ever wonder why $6.6 trillion could vanish from the stock market so suddenly? In the market, if someone loses, someone else gains, right? When the market drops, those holding stocks lose money. Those who bought at high prices take the hit. Conversely, those who sold at highs and buy back at lows, short sellers, make money. So, who's holding stocks? You've seen it lately. Your friends, maybe even you, retail investors. In my last video, I said conservatively, at least 80% of US stockholders are retail or foreign investors. In other words, most of that $6.6 trillion that vanished came from retail and foreign investors' pockets. Simply put, that money shifted from retail and foreign investors to short sellers. So, who's shorting the market? Besides hedge funds like Soros, which I mentioned before. Who else? Who had insider info on tariffs? Couldn't they short in advance? Right at the crash's peak, Trump posted that it's the best time to buy stocks, urging people to jump in and buy the dip. Hours later, he announced a 90-day tariff pause. Result? The free-falling U.S. market instantly rebounded. What does that mean? Is the U.S. market's rise or fall now just a matter of Trump's flip-flopping words or a policy shift? If Trump tells you when to buy or sell, can you make money? Could there be insider trading here? If you follow my channel, you know what the US government is scrambling to fix. First, they're out of money to spend. The US Treasury is nearly empty. If it runs dry, the government shuts down. Second, no one's buying US bonds anymore. Since 2021, US bonds have been dumped heavily, their prices collapsing. Simply put, no one wants to lend to the US anymore. So, how do they fix the first problem? No money. Easy. If the market can swing wildly from one Trump statement or policy, the US market becomes the government's ATM. When the treasury's broke, they can spark market volatility to cash in, create a crisis, short the market, take profits, then pump it back up to lure retail investors, newbies, F-zeros, back in. The crash must be sharp but short. If it sinks too deep, retail investors get wiped out, and the market can't recover. You might think this sounds absurd, but it's not me saying it. Trump did. Check his video. He said a longtime friend, not a company, just one guy, made $2.5 billion in a single day. That means this market crash is just a way to transfer wealth from the public to capitalists and the US government. Now, many groups say they'll investigate the government. I just laugh. As for no one buying US bonds, how's the government handling that? I've said it before, they want to spark a market crisis to force money from stocks into bonds. They're trying, but will it work? We'll see. When the tariff news hit, US bonds did rise for 2 or 3 days. But it was always high opens, low closes, with huge trading volume. What's that mean? Tons of people rushed to buy bonds at first, but they ended up holding the bag. Why? I've said it before, when no one buys bonds at auctions, Wall Street firms have to step in and prop them up. So when money poured into bonds, those Wall Street players, who'd been stuck holding them, dumped and bailed. Why? They're stockpiling cash to buy the dip and reposition investments. Plus, If the U.S. government solves its debt issue, capitalists lose control of America. That's why bonds opened high but closed low. Crucially, China and Japan are quietly admitting they're dumping U.S. bonds to fight back since the U.S. is punishing them. They're retaliating with bonds. So, seriously, Trump's plan to shift money from stocks to bonds failed. Simply put, the tariff pause has two reasons. It temporarily fixes the government's cash crunch, but the U.S. thought hit back. Is this over? Many are re-watching my video from a month ago. The once-in-a-lifetime wealth opportunity has finally arrived, saying it's all coming true. Is it? Let me tell you. This tariff round was just a test, a dip in the water. Tariffs, like rate hikes, aim to blow up the global economy, so U.S. capitalists can scoop up assets cheap. But the difference is, this tariff hike became the spark for a financial crisis. When rates rise, money flows to the U.S. for high returns, so the world sells assets to buy dollars, and U.S. assets, crashing global markets. U.S. capitalists then sell their pumped-up assets and use high-value dollars to buy cheap global assets. That's how they harvested the world in round one. Round two, tariffs is like directly robbing your country. How? Say the U.S. slaps tariffs on Vietnam's goods. You sell a component for 10 units. Now they add a 4-unit tariff. What can you do? Two choices. First, to keep profits, you raise the price to 14 units, passing the tariff to consumers. But higher prices mean fewer buyers, fewer orders, less revenue. You cut jobs or go bankrupt. Unemployment spikes in Vietnam. People stop spending, and the economy tanks. Countries tied to you suffer too. With no dollars flowing in, your treasury empties. Your currency crashes. That's option one. Option two. You don't raise prices and eat the tariff. You sell at 10 units but pay 4 in taxes, slashing profits. You lose money, and the outcome's the same. Businesses collapse. The economy sinks. No one invests in Vietnam. Everyone converts to dollars, and your currency tanks. There's a third way. Devalue your currency. Adds a 40% tariff, but you devalue 40%. It cancels out. This keeps businesses alive, but your nation's wealth drops 40%. Simple. When the yen crashes, don't you want to visit Japan? Stuff's suddenly cheaper. No matter what, tariffs choke your dollar supply. No money, bad economy. Your factories, firms, and resources get sold off cheap. Your currency tanks against the dollar, and U.S. capitalists swoop in with strong dollars to buy everything. So, when tariffs hit, yes, U.S. stocks crash, but so do global markets. The U.S. takes a hit, but they push forward. Why? It's a winner-takes-all game, dragging everyone down. Short-term Americans suffer, prices soar. Inflation spikes. Jobs vanish. Markets crash. But it's not just America. The whole world tanks. It's like the 2008 crisis. But post-2008, it's recovered fastest, stronger than ever. Why? When global economies crash and assets are dumped, U.S. capitalists buy cheap. Even if the U.S. risks recession, as long as others crash harder, the U.S. isn't really sinking. Money flows back to the safer U.S., so tariffs or rate hikes drain global dollars, forcing cheap asset sales. But tariffs could spark a global financial crisis, like a war. It starts in the U.S., but the world gets blown up. Got it? Many believe Trump's tariffs are to stop the world from profiting off America, to bring manufacturing back. I laugh. The U.S. can just print money to buy global resources and labor. You think they want Americans back as farmers or factory workers? History's repeating. Tariffs are a massive wealth transfer. They seem to target other nations, but really, They hit ordinary people worldwide. Businesses or investors lose asset value. Workers face inflation, recession, and currency crashes. Your wealth silently flows to U.S. capitalists. If you missed the first prep phase, didn't cash out at high risk, and lack cash or safe assets, you can still sit idly, watching capitalists slaughter and loot as your wealth evaporates. What can we do? Capitalists like Buffett see further and prep earlier. But retail investors like us, we're nimble. Buffett takes a year to buy or sell. We wait for clear money flows, jumping in just as prices spike. Big players set trends. We ride them, cash out, done. Tariffs are also a U.S. bargaining chip globally. Don't want tariffs? Buy U.S. bonds. Resist and your nation's assets get sold cheap to U.S. capitalists. Buffett, Gates, Zuckerberg and I are all holding cash, waiting to buy cheap. This tariff test gauged who sinks, who floats, who fights, who buys bonds. Many nations resisted, but still dumped U.S. bonds, crashing their value 8%. The dollar weakened. Capital fled the U.S. port. That's why I've avoided long-term U.S. bonds since last year, swapping dollars for gold and yen. When global markets crashed, investors didn't flock to the U.S. port. What's that mean? The world chose financial crisis over U.S. bonds. This tariff hike might be past the point of no return. U.S. port, stocks, dollars and bonds are all tanking. Save one, lose the others. The Fed and pro-capitalists aren't helping. Check my last video for why. If all three markets die, the U.S. government's only move is to rise from the ashes. Spark a global crisis. Let the world eat the fallout. Why did U.S. stocks crash so fast? Simple. I buy a U.S. stock at $100. It hits $200. I want more, but have no cash. I pledge that $200 stock to a bank, borrow $150, and buy more. Tariffs hit, the market crashes, and the bank demands the $150 back now, or they'll sell my stock. To avoid that, I need $150, but I don't have it. I wouldn't have borrowed otherwise. So, the bank dumps my stock. If tons of people like me can't repay, a flood of stocks gets sold off, no matter the price. That's why U.S. stocks tanked. To avoid this, I'd sell other assets. European stocks, Japanese stocks, oil, Bitcoin, to get cash to repay the bank. Everyone needs cash, not goods. When banks call in loans, they're sucking back dollars they pumped out, causing a global liquidity crisis. Tons sell assets, but few can buy assets, just sit. This might just be the start. To fix liquidity, balance, money, and assets. How? Simple. I said it before. The Fed must act. Expand its balance sheet, print money. Two options. First, step in now. Keep high rates. Pump cash to stop a deep crash. Stocks might recover slightly, but won't boom. Could even keep falling long term. Second, more likely since 2008, in 2020, wait for a worse crisis. Then print unlimited money. Lend to U.S. capitalists at 0% interest. This suits the Fed's backers. If tariffs trigger a global crisis, as long as the world's worse off, the U.S. becomes the safe haven. Bonds get buyers again. Capitalists behind the Fed. When the world crashes, assets get dumped cheap. They print, borrow at 0%, and scoop everything. U.S. stocks and global assets return to U.S. capitalists. Bond issues ease, and interest payments drop with 0% rates. That's why I've thought since last year, spark a crisis, go back to 0% rates, expand the balance sheet. That's why Buffett dumped bank stocks. Crises make banks unpayable, crashing their value. If you're sharp, You've spotted the chance to buy the dip. Not now. Prices could spike or crash on a whim from the US government. Buying now gets quick cash, not big wins, and you might lose tomorrow, cutting losses constantly. So, we're hibernating, focusing on assets that hold value, not gain. Since last year, we've swapped dollars for gold and yen, sticking firm. We tested shorting Tesla briefly, did well, but stressed it was a trial. Real shorting comes when the Fed or US government uses tariffs to spark a crisis, fully crashing US stocks. Then we short hard, and when the Fed prints and pumps cash, we slowly buy the dip. That's our big plan. In 2008, many were laborers or waiters. Now some are rich mentors beside me. Post-2008, classes solidified, ex-waiters now live hourly wealth most can't dream of. I was young then, missed it. Now I'm grown, and the chance is here. I'm ready. Sleeves rolled. If it doesn't come, no loss. I reposition to not miss this. Prep now, align with my mindset. Master my methods, make them yours. Don't ask at the last second. Should I buy? Is this asset good? I'm stuck in losses. Opportunity passes, and who knows how long till the next. Things will get wilder. Time's short, so I'll stop here. I share free insights on getting rich, becoming entrepreneurs, investors, and financially free. Don't miss out. Subscribe, hit the bell, share this video. I wish everyone who liked this video swift financial freedom. If you found even one or two helpful lines to live better, I'm fulfilled.